Welcome back, ladies and gentlemen, to EB Nickel's channel, accelerating the transition to the clean energy future, discovering battery metals. Joining us today is Chief Executive Officer Sean Sampson. Welcome back, sir.
Great to be back. Nice to see you again.
Yes, always a pleasure, especially in these exciting times, because we're going through, as you mentioned, a historic event with the nickel prices. And I want to pull up a chart because I don't think people can understand something like this unless it was coming out of the stock market. But for a commodity price to go through a jump like this that obviously hasn't really been seen ever in its history, because this was like an overnight event almost. Break this down for us as somebody that's, an expert in the exploration of nickel metals, and tell us what's going on here.
Yeah, thanks. Well, first and foremost, I began my career as a trader, and I know well from that experience that unless you're in the market, you really can't explain what's going on. So I preface my comments by saying I am an outsider, not a trader on the LME. But as best I can tell, and from what I've read and spoken to people who are closer to it, it seems as though what happened was, as is published, a short squeeze went on. So the situation with nickel is that you have, like the other metals, it trades on the London Metals Exchange. And what the exchange is meant to be doing is similar to a stock exchange. It provides price discovery. So it allows supply and demand to match up to give a price point, and it provides liquidity. And a key difference from stock exchanges, when you look at the chart, for example, versus the metals exchange, is on the metals exchange, you actually have buyers and sellers who need the material. So you have market participants who are showing up at the London Metals Exchange to either sell their metal because they've produced it, the mining companies, or to buy their metal, primarily in the nickel space, stainless steel producers. And then on top of that, you have financial participants. You have actual traders who are on the market. So that's different than like a stock exchange. Nobody shows up in the New York markets because they have either produced an Amazon share, although that's the company, the issuer, but nobody is buying because they require Amazon shares for some subsequent step they have. So a key difference between metals exchanges and stock exchanges are you have actual market participants in the metals exchange. So what seems to have happened on the LME with nickel, which is still halted and still sort of working out what went down, was you had an initial run in the nickel price. So nickel price began going up, I think primarily because of the headline around the conflict in Ukraine, the terrible conflict in Ukraine, and the fact that Russia is the largest producer of nickel in the world. So with that headline, with a concern about supply getting out of Russia and being able to participate in the market, the price began to spike. And what you have on the exchange is you have these fundamental industry buyers and sellers. So you have mining companies, for example, and I used to play this role when I was with a much larger mining company where we were selling our material before we had produced it. So if you're a metals miner, you have to be paying your labor and all of the costs for your business, and you want to be able to have an idea of what price you'll be selling your metal at down the road. Well, what you do is you enter into short-term contracts where you sell at some future point, and then you deliver against it, knowing you're going to get the metal out of the ground. So you always have like a cycle of short sales underway. But what that does is it leaves you short the metal in the market. So if the price begins to run and begins to take off, it means that if you've sold short, those from whom you've done that trade begin to make margin calls on you. So they'll ask for more money to be put up to cover that short trade. So what that means is if you're a trader, you understand that well. But if you're a mining company who had planned to deliver actual metal against that contract, you have a financial squeeze. So that begins, and then you end up having to buy in the market to look after that margin call, which snowballs the effect of the metal price. So the metal price goes up, then people realize you're vulnerable, and traders, and again, I don't know necessarily what happened, but oftentimes in these situations, you have other traders, other participants in the market, in a way, participate to squeeze you. So that's the idea of a short squeeze. So what happened in the nickel market was, and this is well understood with some neat articles that are out there, that a market participant the largest nickel producer in the world, broadly defined nickel, including nickel pig iron, not just nickel sulfide, which is the focus of my company. The largest nickel producer in the world had futures contracts, which had them short the market. The price took off. They had margin calls. They had to buy more to try to cover the margin calls. And then it all snowballed up. And then the market called a timeout. And since that point, they've been trying to work through it. Now, it's a very interesting story because people of our age only really know about this from having learned about it in school, where it happened in the 80s with the tin market. But now it's happening in real time in the nickel market. Again, begun by the conflict in Ukraine and that initial concern about Russian supply not being able to get onto the market. And then markets being markets, it sort of took off. But it's really interesting to think about a short squeeze in the metals market, because again, you have these two types of participants in the metal market. You have fundamental participants who are mining companies and companies that need to buy the metal. And then you have the financial participants, the true traders who are there for the volatility. And again, the purpose of the metals exchange is to provide price discovery and liquidity. So for a mining company, for me to be able to understand what my metal is going to be worth, that metals exchange is key because it provides you the best market data. And then once we're hopefully into production one day, and as I've been in the past in my career, you use the metals exchange to be entering into these contracts to understand what price you'll get for the metal you're pulling out now, which really allows you to hold your business together. So in this market, you had fundamental participants getting squeezed, I think primarily by the financial participants. So you had the market call a timeout. And it's very interesting if you get into it. You know, the main participant who got squeezed, they refer to him as Big Shot, which makes for fantastic stories. And then you also have, on top of that, loaded up intrigue around the fact that the LME is now owned by the Hong Kong Exchange, which is controlled by the Chinese. And you have that key participant, Big Shot, is Chinese. So who's to say there wasn't something going on there? I don't know. But what was done was the market called the timeout, similar to how they did in the tin market back in the 80s. And they're sorting this all out, which includes unwinding a number of trades that put the squeeze on against this market participant. So some people cry foul to that. A number of these financial participants are saying they'll never come back to the LME. I think a lot of that is overdone because the reality is it's a fundamental market where financial participants can come in and trade off the volatility. And that's really what traders are looking for. They're sort of agnostic what the underlying market is. They're just looking for the volatility. So I suspect we'll be able to have a functioning market at some time soon once this is all sorted out. And we'll get back to market fundamental participants. So mining companies and people who need to buy metal continuing to use the metals exchange as a way to meet on the market. And then around that, you'll have financial participants who are themselves making money off the volatility with the trading and providing that liquidity because everybody, we in the market require the financial participants because they provide the liquidity. They're the ones often behind these contracts when mining companies lock in a price. So the two sides work well. They have worked well for many years within the metals exchange. And I think now we're just sorting out because of this squeeze, then we'll be back to normal and have a functioning metal market. But the obvious question becomes, what does that really mean to participants in the market and more specifically us? So participants in the market, I think it's been a wonderful opportunity for people to shine a light on what's going on in the nickel space. So I have received many, many notes from non-market participants who are reaching out to me knowing I'm in the nickel space, always asking about Big Shot, which again is a very interesting part of this story. So I think there's been investors and others who are all of a sudden paying more attention to nickel. What's going on right now with this short-term nickel price spike? Again, I think that there was an actual market shift with the concern around the Russian supply, maybe not being able to get out into the market. I then wonder how real that is because just like Russia is the largest supplier of nickel in the world, the largest buyer of nickel in the world is the Chinese. And there continues to be a link between Russia and China. I would anticipate that the stainless steel producers in China will be able to sort out getting their supply from their, for now, ally Russia. So there's noise short term, fundamental noise, market noise between the supply and demand. It's all been compounded by this financial market squeeze that went on. But I think what it does is it draws people's attention to the nickel market, because fundamentally we still have a real problem on our hands. But again, you got to look out a decade for that. Right now, nickel is a stainless steel story. And with the rising demand from the electric vehicle batteries, it's adding a new demand category to the global base metal nickel. And the market, the mining side, is not ready with the supply to meet that demand. But again, that's about a decade out. So right now, this is short-term noise. It's led to a tremendous spike. That chart you threw up, it brings people's attentions into the metal. But I think the real story here is medium and long-term, sort of out a decade, is really when the category has some real problems on its hands, because you have a new demand category coming on, and we just cannot find, the supply is not going to be there in the market, which I anticipate is going to lead to higher prices. Not the cliff of a chart that we're looking at today, but I do think we have the fundamentals to have the price go up for nickel over time to try to reach what's required for that supply to come on the market. And that's really where my company is coming in. So we have nickel in the ground with our project. We anticipate we're going to find more nickel in the ground on the Langmuir project. We announced our transaction to acquire 21,000 more hectares on the Shaw Dome and around. So we're tripling our land package. We know there's mineralization across that land package, which is the good high quality grade nickel mineralization, the type of grade that gets turned into mines and has hosted historic mining. So we've got an enormous land package. We're doing three things. We're finding as much nickel as we can. We're getting our hands on more land, and we're going to begin putting together the parts of the story for clean nickel. And what's happening is the market is shifting to low carbon nickel production. That's what's required for this new demand category. The stainless steel, the current demand, they're less focused on the carbon score that goes with the nickel price. And we think that clean nickel, the clean nickel sulfides, the type of metal that we have in the ground and the way in which we think we can get it out and produced and ready for customers, that's really where the focus is going to be with these EV battery makers. And I think that this short-term noise with the nickel price brings people's attention in. But once they're looking at it, they understand that here we have a global base metal, which has a fundamental issue, but it's more medium and long-term out. Short-term, I hope that the issues in Ukraine are able to sort themselves out. For the near term, it does seem as though, from my perspective, you've got Russian supply and Chinese demand. And for now, they're strategically aligned, so they should be able to meet up. But again, the real issue with nickel is further out. It's looking at decade, and we don't have the supply to meet what looks like the forecast for the demand.
On that note, Sean, I think you answered all my questions. You talked about the supply, the demand issues, how you guys are kind of solving that problem there. People want to learn more. Where should they go?
Our website, and we're always available for discussions. So all of our materials on evnickel.com, and we can line up meetings to get into more detail through that website.
Awesome. On that note, folks, I'm going to pass the question off to you. This has been a fascinating conversation. I'd love to know what you think in that comment section below. Consider subscribing, because as this news evolves, we'll continue to update you here. But stay cool, stay awesome. And as always, I look forward to catching you in the next one.